Hi, I'm Jim Jubak, and welcome to this week's Quick Pick video. This week's Quick Pick is the Invesco DBA Agriculture ETF. It's a commodity ETF. I own a couple of commodity ETFs in my portfolio now. I'm in the process of rolling out of those into these because in general, I'm looking to reduce the volatility in my portfolio, not to increase it. And there's been some real problems with the series of commodity ETFs that I owned. They're all run by Barclays. Here's the example of a chart of one. This is an agriculture commodity ETN, not quite the same as an ETF, but close enough. Barclays ran into a regulatory problem. They sold more than they had permission to sell. They had somehow forgotten that there was a limit on to how much they could sell. So we got this incredible volatility spike. It's really important for a sponsor to be able to sell them because as more money comes in, you want to try to keep the value of the assets owned by the ETF or the ETN close to the price of the ETF. The price just ran up, and this is because they didn't have enough shares to sell. And then somebody noticed that there was a big gap between the net asset value and the price, and they gamed it, and it went down almost 20% in a day. There's enough volatility in the market without my taking on volatility because of the sponsor of an ETF or an ETN. So I'm going to trade out of all of these over the next week or so. And one of the first ones that I'm going to trade into is this one, which is also an agriculture ETF. You notice that commodity ETFs are not exactly low volatility things. So you still got this and this, but this is a whole lot less volatile than the Barclays ETF, ETN, because, well, it doesn't have that regulatory problem. They own about 7.4% of the fund is in corn futures, 6% is in soybean futures, 5% is in sugar, another 5% in coffee, 4% in wheat, and that's what's driving these. That's what's driving this appreciation as inflation across the globe, as well as the food inflation from the Ukraine war really hits in the commodity prices. The expense ratio on this ETF is about 0.85. It's up about 16% year to date. It's got about 2.3 billion in total assets, which is a fairly decent size. Trading volume is about 3.8 million shares on average. And in this current market, I think you want to make sure that you've got enough liquidity in whatever ETFs, et cetera, that you own so that you don't get whipsawed like in the chart that I just showed you about the Barclays commodity ETF. We're just really trying to find a good vehicle to play the rise in commodity prices. So that's my quick pick. I will be adding that to replace the Barclays fund over the next couple of days in the portfolios on my jubakpicks free site. That's jubakpicks.com, and in the portfolios on my paid site, which is jubakam.com, that has 6 portfolios instead of just 3, and a little more volatility emphasis, coverage, if you will. So thanks for watching. Bye for now.